Thanks to Doug and to Brookings for this opportunity. I'll go straight into this because I have more slides and number of minutes here. This is a snapshot of the key messages which I have in my book. Basically, financial collateral. These are like US Treasuries, German bonds, which can move cross-border. The numbers associated with this collateral are huge and at par with money metrics. So when we learn about money, M0, M1, M2, these numbers are an integral part of financial lubrication, which involves either collateral, you can settle accounts with collateral or with money. And the numbers are large enough that we cannot be dismissive about them. That's a key point which I'll try to describe through data, that these are large volumes which you cannot ignore. And I'll apply it, at least today, to two themes. One is monetary policy, where with the QE, central banks have interplayed or interfered with the financial plumbing. Markets used to do the plumbing. Now with QE, basically what that means is you take collateral from the market. In exchange, you print money and pass that to the market. So a huge amount of collaterals have been taken in by some central banks. So far, it has been the Fed, it has been the United Kingdom, and we'll see ECB doing something next month. And the second thing which I'll try to get my hands on today will be the proposed regulation of moving OTC derivatives to CCPs or central counterparties. There are other themes over here which I'll just try to give you a flavor up front. I may not get into that. The shadow banking should not be a pejorative term. It's always viewed with a negative connotation. There is capital even within shadow banking. When shadow banking actors move, there are margins, there are haircuts, and that's the capital. Unfortunately, nobody has compiled a study on what is the capital associated in the shadow banking world. We have Basel 8%, but we do not know what the corresponding number would be in the shadow banking world. However, my take from the book is it's not a pejorative term, it's not a negative, and chances are, given the way we are going to trim the banking sector, by default, shadow banking sector will grow. QE and regulations have overlapped in the changing collateral space. As we look forward, we cannot look at regulations independent of QE. There is an overlap, and I'll try to see how much I can get that. But please be cognizant, you cannot look at regulations without the flip side, which has been QE. And it's still happening. One central bank will start QE next month. Safe asset, is there really a shortage? And here I'll try to bring in the concept of the reuse of collateral, because there is 70 trillion plus of AAA, AA securities. Only a small fraction of that actually gets reused. A lot of it gets siloed, and it doesn't see the light of the day. Now, if you do want to make some country wants to be in the business of public good, there are many issues out here. Which country? Why? Isn't there a fiduciary duty from a debt management angle also as to what type of collateral should be coming out? So the safe asset side story has to be cognizant. There's something called the reuse rate, or what I call the collateral velocity.